When experts measure the health of the economy, they consider a lot of different factors. Some focus on the gross domestic product, or the GDP, while others prioritize labor markets or housing markets. I spoke with two economists to get their perspectives on the current economy, to find out if America is in a recession, what's going on with inflation, and what could happen next.
The economy is in a really interesting position right now.
Diana Furch-Gottroth is an adjunct economics professor at George Washington University and former chief economist at the Department of Labor.
We have never had such a gap between gross domestic investment and consumption and spending.
In this case, consumption is what you or I do when we spend our money. Gross private domestic investment is a measure of how American businesses decide to invest their money. For example, building new offices or buying new software and equipment.
We have investment really down. It was down 13.5% on an annualized basis last quarter, but yet we have consumption that is positive. We definitely saw from the first half of the year that GDP declined, which is our definition of recession.
GDP is the total value of a country's annual output of goods and services.
Now we are in the third quarter, and data from the third quarter are really good. We don't know if we are in a recession right now.
Broadly speaking, a recession is an economic downturn. Some describe it as the GDP falling over two consecutive quarters.
We think about the economy. Sometimes people think about GDP. What I think about is what's happening in the labor market, how people are doing.
Elise Gould is a senior economist at the Economic Policy Institute.
So when I look at the economy and I look at the labor market, I'm looking at a few different characteristics of the labor market. One is, what does job growth look like? And we have seen pretty strong job growth over the last few months, particularly the last month. So there's no signs there that we are in any kind of a recession.
Gould also looks at the unemployment rate, or the percentage of Americans without jobs, in order to measure the economy.
Right now, we have an unemployment rate of about 3.5%, but that's a fairly strong economy.
Gould says it's also important to look at who's hurt the most during an economic downturn.
The Black unemployment rate is on average twice as high as the white unemployment rate. Similarly, young workers are hurt much more in recessions than older workers and more established workers. And then I look at wage growth. And on wage growth, we have seen it be historically kind of fast, though it is not keeping up with inflation for most people.
Inflation is the general increase in the prices of goods and services in an economy. We've talked about that a lot lately, and that's because this year, inflation shot up more than 9% in June, its highest since 1981.
Inflation is coming from outside the labor market. It's coming from some of the supply chain bottlenecks that we saw as a result of the pandemic. They're coming from higher energy prices, though we are seeing some of that coming down.
Inflation has really gotten bad because of excess federal spending, of actions by the Federal Reserve that kept interest rates low for too long.
The Federal Reserve is America's central bank, and it controls interest rates for money it lends to banks. It can also raise those interest rates to try to curb inflation. They did that most recently in July.
And it's had two increases of 3/4 of a percentage point, and it's probably going to increase interest rates by about 1.5% through the end of the year. Then it'll continue next year if inflation does not subside.
It's kind of a blunt instrument in that way in terms of attacking inflation.
The people who have to borrow are the losers because interest rates are going up. So people with adjustable rate mortgages, they see their mortgages are rising. People who have credit card balances, they are hurting. And of course, the average man in the street now has to pay more for gasoline, more for milk, more for eggs.
I can understand that we want to raise interest rates, but maybe we want to do it more slowly and more gradually. Continuing at this fast pace may have unintended consequences that can hurt workers that may lose their job.
Despite recent fluctuations, both economists predict that inflation will keep dropping and expect the economy to strengthen over time.
I'm generally optimistic.
I am optimistic that the economy is going to get better in the future and that we are going to have a mild recession, which is going to get inflation out of the economy, and then the economy is going to continue to increase.
So we are now at the kinds of jobs numbers that we saw in terms of payroll employment. We're back to where we were pre-pandemic. We still have a lot of work to do to absorb population growth, to get back to the kind of participation that we had before. But I think we are on track to get there.